This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices fell on Wednesday, ending a three-day rally, as an unexpected rise in U.S. oil inventories sparked demand concerns and investors awaited U.S. inflation data to gauge the next rate decision in the top oil-consuming nation. Brent crude dropped 69 cents, or 0.9%, to $76.75 a barrel at 0643 GMT, while U.S. West Texas Intermediate, WTI, crude fell 67 cents, or 0.9%, to $73.04. In a possible sign of weakening demand, U.S. crude inventories rose by about 3.6 million barrels in the week ended May 5, while gasoline stockpiles rose by 399,000 barrels, the American Petroleum Institute reported on Tuesday according to market sources.
The United Arab Emirates said on Tuesday that countries should agree to phase out fuel emissions, not the production of oil, gas and coal, at the upcoming UN climate change negotiations that it will host this December. The comments reflect deep divisions between nations over how to combat global warming ahead of the COP28 talks. Some wealthy Western governments and climate-afflicted island nations have been pushing for a phase-out of fossil fuels, while resource-rich countries have campaigned to keep drilling. UAE Minister of Climate Change and Environment Maryam Almhiri told Reuters in an interview that phasing out fossil fuels would hurt countries that depend on them for revenue or cannot easily replace them with renewable sources.
Moving on to the top news in the energy sector.
U.S. power consumption will ease in 2023 from last year's record high as slower economic growth and milder weather depress usage, the U.S. Energy Information Administration, EIA, said in its short-term energy outlook, STIO, on Tuesday. EIA projected power demand will slide from a record 4,048 billion kilowatt-hours, kWh, in 2022 to 4,031 billion kilowatt-hours in 2023, before rising to 4,081 billion kilowatt-hours in 2024 as economic growth ramps up. That compares with an 8-year low of 3,856 billion kilowatt-hours in 2020, when the coronavirus pandemic depressed demand.
Portfolio investors have dumped petroleum futures and options, reversing the buying frenzy inspired by the production cuts announced by Saudi Arabia and its OPEC allies at the start of April. Hedge funds and other money managers sold the equivalent of 145 million barrels in the 6 most important futures and options contracts over the 7 days ending on May 2. Fund managers have sold a total of 232 million barrels in the 2 most recent weeks, the fastest pace of selling since the U.S. banking crisis erupted in March and before that the imminent arrival of the pandemic in February 2020.
Next, we have the top news in metal markets.
Indonesia became the world's second-largest cobalt supplier last year, behind top-ranked Democratic Republic of Congo, as it accounted for almost 5% of global production of the battery material, according to data from UK-based Cobalt Institute. Cobalt is a key ingredient for the rechargeable lithium-ion batteries used in electric vehicles, sales of which are expected to accelerate over coming years as the auto industry moves to meet emissions targets. Indonesia's production of cobalt surged to 9,500 tons in 2022 from 2,700 tons in 2021, according to the institute.
Benchmark iron ore futures held their ground on Wednesday, supported by renewed optimism around demand prospects in top steel producer China, while other steelmaking ingredients including coking coal slumped after a 2-day advance. Iron ore's most active June contract on the Singapore Exchange was up 1.6% at $103.65 a ton, as of 0330 GMT, having hit $105.15 earlier in the session. On China's Dalian Commodity Exchange, iron ore's most traded September contract ended morning trade 0.1% lower at 721 yuan a ton. It earlier touched 733 yuan, its strongest since April 24. We will now look at the top news in the agricultural sector. Chicago soybean futures dipped on Wednesday as a fast pace of planting across the U.S. Midwest and slowing imports by top buyer China kept a lid on the market. Wheat edged higher after closing sharply lower on Tuesday amid growing uncertainty over the extension of a Black Sea export deal, which allows Ukraine to ship grains despite war with Russia. Planting progress is ahead of schedule and the weather forecast also carries a bearish tilt, commodities research firm Hightower said in a report, referring to the soybean market.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.